Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra. Well, the Indian stock markets are among the fastest globally with a T+1 settlement cycle, and seems now it is also going to gather even more speed as Sebi Chairperson Madhabi Puri Buch recently announced that the regulator is now working on an instant settlement mechanism that will see the shares and money move on a real-time basis. So what exactly is instant settlement of shares and how will it impact you as investors of stocks and mutual funds? We'll break it down for you over 5 facts that's frequently asked questions right here. And joining in to simplify all of this for you is my colleague Ashish Rukhayar, Senior Associate Editor at Business Today TV. Welcome Ashish, and thank you so much for taking the time out. So, help our viewers first understand what exactly has Sebi announced when it comes to instant settlement mechanism.
Thank you, Sakshi, for having me on the show. Now, we all are aware what RTGS system is, real-time gross settlement system. Everyone who has a bank account and transfers money from one account to another is aware of what RTGS is. Simply put, it's basically real-time transfer of money. Now, let's imagine our stock markets also having a similar kind of system, similar kind of settlement mechanism. But that's a big development from when you look at it from a stock market perspective, because what SEBI is trying to do is bringing in an RTGS kind of system that will allow for instant transfer of stocks or cash. So, for instance, if you are buying shares, you punch in a trade and the shares will be there in your account the very next moment. Similarly, if you're selling shares, the money will be credited to your account in an instant. So this is actually a very big development, and the regulator has very clearly said. In fact, SEBI Chairperson Madhabi Puri held a press conference just earlier this week, and she said that the regulator has already engaged, is already in discussion with various market participants to develop the ecosystem. She very clearly said that we already have the technology, and this will be a very big move for the markets, because see, Indian stock markets are already among the fastest globally. But then I guess there's no harm in aiming higher and becoming the fastest in terms of instant settlement. People are already used to this kind of instant transfer when it comes to bank transfer. I mean, the point that we referred to an earlier, RTGS. So basically, in a nutshell, what SEBI is looking at currently is bringing in a system just like RTGS in the Indian stock markets that will allow for instant transfer of stocks or cash.
Great, Ashish. That really simplifies to a lot of extent for all our viewers to understand what exactly is the instant settlement mechanism, something that you do with your bank transfers, looking at it from that perspective and understanding how will it work in the stock markets. But how will it be different from the current settlement mechanism? What exactly is the current settlement mechanism right now?
So currently, India works on a T+1 settlement cycle. Now, for the benefit of our viewers, let us explain what exactly is T+1. T in market parlance refers to the day on which you have done the trading. So, say for instance, we have bought a share, we have put in a buy transaction today. So today is T in market parlance. Now the shares will be credited will be transferred to the demat account plus one, that is the next day. So if you if you buy shares today, your demat account will get the shares tomorrow. Similarly, if you have sold shares, the money will be credited to your account the next day. So that is basically the T+1 settlement cycle on which the Indian stock markets currently function. So in simply put, stocks or funds take a day's time to be transferred to the investor account. Now T+1 is also not. It's, if you look, I mean, the point that we mentioned earlier also, India is still among the fastest markets. In fact, many of the developed markets like UK, US, even most of the European markets still don't have a T+1 mechanism also. So currently, India is already among the fastest, and we work on a T+1 settlement system, which means that if you buy shares today, your demat accounts will be, you'll get the shares tomorrow in your demat account.
Sure. Sure, absolutely. So, do you see this, and what are experts really telling you? Is this like a game changer move for the Indian stock markets?
Well, it is definitely going to be a game changer. The SEBI chairperson clearly said that we have the technology to implement such a system, but she also clarified that we are still some time away. We have the system, but obviously we all know that bringing any new system, any new mechanism involves a lot of technology, a lot of stakeholders. We have stock exchanges, we have depositories, we have brokers, we have the whole banking system. So everyone has to be in sync to get this piece together. Now, from an Indian stock market perspective, it's actually a huge jump, because see, till 2001, Indian stock market had a weekly settlement system. So it used to take 7 to 10 days for a trade to get settled. That was a huge period. Then in 2003, around mid of 2003, we moved to a T plus 2 settlement. That means all the transactions took 2 days to settle. Then earlier this year, we moved to a T plus 1. So it took us 20 odd years to move from T plus 2 to T plus 1. And just a
Wow.
few months into T plus 1, and the regulator and all the market intermediaries are already looking at bringing in a system which would be instant settlement. So you see, I mean, just to reduce 1 day of your settlement cycle, it took almost 2 decades. But now we are just talking about a few months. I understand that it's still some time away, but even if we assume that it may be, it takes another 1 year, or maybe, few months, or maybe 1 year, and still
Hmm.
it would be just a couple of years from couple of years
Sure.
which will move from T plus 1 to instant settlement. So that's going to be a huge jump for the Indian stock markets as well.
Absolutely, a very, very short, very sharp journey from T plus 1 to T plus 0, and that's going to be a game changer for sure. And it'll help in the liquidity flow for a lot of investors, a lot of traders especially, whose money gets blocked on a T plus 1 or a T plus 2, which had been a case in the last many years as well. So now getting the money immediately into the bank accounts means more trading flow and more stocks getting traded perhaps. So that would perhaps also give a fillip to the volumes. Now, I wanted to understand, was the implementation of this shorter settlement cycle smooth?
Well, any new system that you want to bring into the markets, there will always be some amount, or some section of market participants that will oppose it initially, whether it was demat, whether it was any other move also in terms of technology, which increases the efficiency and safety of the market. There's always a section of markets that initially oppose it, but obviously over a longer period of time, they fall in line. They know that it's from a long term perspective, it's for the betterment of the whole industry. So similarly, when SEBI had initially proposed moving to a T plus 1 settlement mechanism, there was initial opposition from the broker, from the stock broking community, even from the foreign portfolio investors fraternity also, because they said that there will be a lot of operational and procedural challenges, and they would need much more time to put in place all the systems, so that everyone could graduate simultaneously to T plus 1 settlement cycle. Because see, if there are certain stocks which are on T plus 1 and certain stocks on T plus 2, then there will be a lot of issues and a lot of confusion in the markets. So everyone wanted to be on the same page when the new system is being implemented. And when SEBI came out for the first time saying that we'll move from T plus 2 to T plus 1, so as I said, there was initial opposition. A certain section of the markets said that the implementation could be delayed because we will need some more time to implement or put in place the system. But if you look at the markets now, everything is smooth, and I mean T plus 1 is also working very efficiently. So there's no doubt that even when we move towards instant settlement, there will not be much of a problem, because as I said, I mean, if you look at this huge banking segment, it's already working on an instant settlement system. So there's no reason
Yeah.
why the stock markets cannot move to instant settlement system.
All right, understood that. So finally, how do investors stand to gain with a shorter settlement cycle? That's the question that every investor really wants to understand.
Exactly, you're right, Sakshi, because that's actually the most important question. Because any policy move, any regulation that is brought into the market, the first lens through which it needs to be looked is what does it bring to the investors? How do the investors gain, or how does it increase the efficiency and the safety of the markets? So this is actually a very interesting question as well, because just as I mentioned, SEBI had held a press conference recently, and in which SEBI said that we have done an internal analysis, and which showed that the annual benefits accrued to investors due to shorter settlement cycle was close to 3,500 crore. That's not a small amount. And see, we need to look at it from the time value of money point of view, because say for instance, when you have a shorter settlement cycle, the same amount of money can be used to trade more in the stock markets. Earlier it
Correct.
was T plus 2 or T plus 3, so you put in a trade, your money is blocked for 3 days. You want to buy something, but you want to use the existing you want to offload some part of your portfolio to buy new shares. So
Yes.
you'll sell the shares today, but you will have to wait for 2 or 3 days to get the money. In the current scenario, you have to wait at least for a day to get the money, and then you can trade again. But in an instant settlement system, once it's in place, you may sell the shares today, you get the money instantly, and you may again put it back to in the markets. So
Yeah.
the time value of money goes up exponentially when you have an instant settlement system. In fact, if you look at it from the mutual fund angle also, because that's a very important angle, because mutual funds are, if you see, mutual funds are the most popular avenues of investing in the stock markets. We saw in the last
Yes.
couple of years millions of investors coming to the markets through the mutual fund route, and we always have said that SIP is one of the best ways to invest in the stock markets.
Yes.
So once once the Indian stock markets move to the T+1 mechanism, when mutual funds move to the T+2 cycle. So if you have mutual fund units, you want to redeem it today, you'll get the money in 2 days. So I mean, and once you move to the instant settlement, you never know. Mutual fund could be as liquid as your bank account is, as liquid as cash in your bank. So from an investor point of view, there is a lot of benefits. As I said, Sebi's analysis says that people have, because of the shorter settlement cycle, people have, the benefits have been in around 3,500 crore, and it's a combination of different things. Even if you look at if you look at IPO, you have a system called ASBA, again, which is your money stays blocked in your account, and the whole refund and all those processes have been done away with. The markets, in the secondary markets, it's the shorter settlement cycle. So a combination of these things. In the primary market, you have ASBA. In the secondary market, you have T+1. In the mutual fund segment, you have T+2 cycle. So given, if you look at the combined benefit of it, it runs into thousands of crores from an investor point of view. So definitely investors will stand to gain a lot once this system is put in place.
Okay, understood that. Well, thank you so much, Ashish, for breaking all of these down in very, very simple 5 frequently asked questions, and therefore all these questions answered. And this, I hope, really clarifies all the air around the instant settlement mechanism, what Sebi is really aiming to do, and how will it really impact the end user, that's the investors of both the stock markets and mutual funds, and thereby impact the larger financial market ecosystem as well. Many thanks, Ashish, for sharing all these insights with us. Pleasure having you with us on BTTV. Let's look at how the markets are also looking like. There is a dip in the markets currently, 532 points down on the Sensex. The Nifty is also down by 145 odd points. So slight profit booking really taking shape on this series F&O expiry as we speak. But definitely the capital markets regulator looking to improve the system in the markets as well to benefit the investors at large. We'll wrap it up at that, but do stay tuned on to Business Today TV to catch all the updates on the closing action on the D Street too.